Hello, I am Alexandra Marchewicz and welcome to The Bottom Line, where we break down the most pressing business and economic issues of the day. Now, Slovakia's economy, once a beacon of resilience in Central Europe, is now showing a sign of a slowdown. Recent data reveals that GDP growth in the second quarter of the 2024 was the lowest in the past year, raising concerns about the sustainability of the country's recovery. Now, to explore what lies ahead, I'm joined by Vladimír Vaňo, chief economist at Globsec. Hello, sir, and welcome to TVP World.
Good evening. Thank you for the invitation.
So now Slovakia's GDP grew by 1.9% in the second quarter compared to a growth of 2.7% in the first quarter. So given this data, how would you assess the overall health of the Slovak economy right now?
The second quarter flash estimate for the GDP was certainly a slowdown. Nevertheless, when we look at the forecast for the full year as recently as in June, these forecasts were in the range from 2 to 3%. Basically, mostly the domestic official forecasters were leaning towards this 3% target, whereas OECD, for example, forecasted only 2% growth. So taken with this complexity, the second quarter GDP growth was not such a surprise. We don't know the breakdown yet because it was a flash estimate, but basically the expectation is that the domestic demand was the main driver, and there one has to take into account that from double digits we've seen this year inflation slowing down under the 3%, which increased the real purchasing value of the Slovak wages. On top of that, Slovaks having enjoyed relatively dynamic nominal, and this year also the real wage growth, both in the private sector and also in the public sector. So, for example, the wage growth in the public sector in the beginning of the year actually surprised positively, because after as much as 14% growth of average wages in public sector in 2023, we have seen over 4% growth this year. So the domestic demand, thanks to the disinflation, is one contributing factor. The public spending, another one. Where the weakness comes is the external demand. Even though the nominal exports did continue to grow in the second quarter by 9%, the net exports slowed down. And then there is investment. And the investment assumption for this year was heavily based on efficient drawing of the EU funds, and especially Recovery and Resilience Plan, where we see delays. So domestic demand contributes to this almost 2% continuing growth, while investments and net exports are acting as a drag. Moreover, we see bottlenecks emerging on the labor market and some worrisome developments in the industry, where the biggest industrial sectors slipped into significant red numbers in May and June.
Right, so let's break it down perhaps a little bit more now. You mentioned public investment, and I wonder, especially now as a country funded by the EU, which played a significant role now in supporting the economy. So how do you see these investments evolving in the coming years?
So the key contributor to public investment is, let's be honest, the drawing of the EU structural funds and then this recovery and resilience facility. The drawing of the EU funds is facing the bottleneck of the capacity to process and effectively fulfill the necessary projects. So there the Slovakia has notoriously seen delays. When it comes to the currently the most important financing source from the EU, the Recovery and Resilience Plan, there the situation is even more complicated, because the drawing of the Recovery and Resilience Plan is tied to particular targets, the reform milestones. And what we have seen under the current government since the beginning of the year, that some of the key milestones that should have been fulfilled in order to draw the next tranche have been delayed or are dragging. So this assumption of effective drawing of the recovery resilience plan this year seems to be under danger, and that will influence the public investment picture.
Like you mentioned,
on top
also
of that,
when we see this investment recovery and this resilience plan that was adopted in 2021, if I'm not wrong, Slovakia, we do see that will benefit from it, and 6.4 billion euros, I believe, until out to 2026. So I hope that we'll see how the situation pans out. Now, I'm curious about the external factors, and mainly I'm talking about exports. Now, Slovakia is heavily dependent on exports, particularly to the Eurozone. So how do you expect external demand to impact Slovakia's recovery? Now, given the economic challenges, especially in Germany, as now Slovakia is importing 21% and importing 18%, according to the data from 2023. And Germany is the biggest trading partner for Slovakia. So how do you see this panning out?
First of all, I would emphasize that this clearly high dependence on Germany has developed organically because that was the best market and the market where the Slovak exporters were most competitive. Also, I would like to put into the context that in Czech Republic, the share of exports to Germany is even higher, almost 1/3. Also in Hungary, the share of German exports is higher than in Slovakia. Then, for example, when there was discussion about the duty or levies, the custom barriers against the electric vehicles from China, it was basically chiefly the German auto manufacturers who objected against that. And the analysis, for example, of this particular levies against the Chinese exports showed that Slovakia, together with Germany, would be most significantly hit by disruption of the trade with China. So this also illustrates that, obviously, Slovakia is one of the most open economies. The sum of the exports and imports in Slovakia is sort of 180% of the GDP. We are significantly more open economy than Poland. We definitely will feel very sensitively the developments in the Eurozone, which is forecasted to stagnate, and also the developments in Germany, where the economic forecasts are being revised downwards, and especially because Slovakia has highly concentrated industry in the automotive sector, even though it has successfully diversified into production of the electric vehicles. But we see that when automotive sector sees a slowdown, it affects also the sales of new electric vehicles. On the other hand, one should not forget that Slovak exporters are trying to diversify their portfolio. So Germany is that key post-Iron Curtain market, as you mentioned, with over 1/5 of the exports. The second legacy export market is Czech Republic with 12%. But then I would like to emphasize that Poland ranks as number 3 export market, ahead of countries like France or Austria or United Kingdom.
Right, so now one of the factors that is being mentioned by multiple reports is in fact a lack of skilled labor in Slovakia. So how do you think can Slovakia mitigate that and perhaps better that in the future?
Very important point. One, I dare to say, surprising developments in the second quarter in this flash estimate of the GDP was a release of the employment, which, unlike in the first quarter, saw a slight but still year-on-year negative decline. The unemployment has hit the record low levels of 5.5%. There is a lot of talk about increased labor participation. It means bringing more of the voluntarily unemployed people into the workforce. But there I would like to emphasize that the reason why unemployment figures, especially between Slovakia and Czech Republic, look so different is because in Slovakia we have significantly higher share of so-called structural unemployment, which is people who are long-term unemployed and whose structure of skills simply does not fit the structure of the needs of the labor market. So yes, that's one of the bottlenecks that I have mentioned, that also the corporations are signaling, and that's the lack of the available labor force, especially in the services, but also in the industry. And how to solve it, we have seen it. This has been developing over the past decade. More than 10 years ago, you would see just a couple of thousands of foreign workers, especially in a highly specialized manufacturing sectors such as automotive. What we are seeing this year, that the number of official foreign workers in Slovakia is getting into the 6 digits, 100,000, and it is forecasted to continue to grow. Basically, one can see it in the case of the Ukrainian refugees. Ukrainian refugees have integrated into the Slovak labor market very well and actually helped to alleviate this inevitable demographic bottleneck of shrinking productive population and shrinking labor force.
Thank you so much. So that was Vladimír Vaňo, Chief Economist at Globsec. Thank you so much.
Thank you.
That's the bottom line for today. And remember that in the world of business, the bottom line that's the only one that counts. For more business stories, check out our X and tvpworld.com. Alexandra Marhevich signing off. Goodbye.